Is VeChain at risk?
Let's get into it.
So guys, today we're going to be taking another cheeky look at VeChain. We're going to be taking a look at VeChain's charts and to see the price action of the VET token. We're taking a look at the Fear and Greed Index, generally speaking, for the entire crypto space. We'll also be taking a look at 𝗖𝗢 and the VeChain specific Fear and Greed Index, along with the liquidity, Sharpe ratio, profitability, return on investment, all that kind of good stuff that 𝗖𝗢 provides. We'll also be taking a look at the stock-to-flow model and Bitcoin's dominance to give us a bit of a flavor as to where we are within the current cycle. We'll then have a look at the VeChain charts and see exactly what's going on with the price action of VET, and hopefully give us a bit of an idea as to what might be coming during the weekend as we approach next week. Now guys, if you do find this video useful, informative, maybe even entertaining at times, do go ahead and hit that like button. We both really do appreciate that. And of course, if you happen to be new to the channel and you're not yet subscribed and you would like to stay up to date with new cryptocurrencies, the hidden gems that we talk about here, the technical analysis and news, then do become a subscriber. By subscribing, you will be kept up to date with absolutely everything. It is free. You'll stay well informed, so why not? And Chris, obviously this is your biggest bag. I want to take that line away from you because I often talk over you and that. But ultimately, Chris, is there anything else that you'd like to add before we get into all the kind of the technical stuff?
Look, there's potential for a bit of a bumpy weekend, right? But no, Nick, I don't think there's really anything to add. Let us know whether you're bearish or bullish in the comments below. Really interested to get an idea of what our viewer sentiment in the market is currently compared to the rest of the market, Nick.
Absolutely right. Okay, let's jump on down and get into the Fear and Greed Index generally and VeChain's Fear and Greed Index as well.
Let's do it.
Okay, guys, here we have Fear and Greed Index for the entire crypto space. I've pulled this up on so many occasions. You'll be very familiar with it by now. Ultimately, we today have a rating of 21. Yesterday, it was 27. So there was fear yesterday. There's extreme fear today. Last week, there was extreme fear. We're going into a weekend. It's a bank holiday weekend in the UK here. So ultimately, that's also going to extend some of this fear, I feel, going longer term. Ultimately, last month, we had a greed, a relatively high Fear and Greed Index of 59. So obviously we are polar opposite to that right now. And as I often say, you buy the fear in a bull market, and you basically if it's greedy, you expect a pullback, right? So ultimately, when you have this generalized fear and greed index, it tells us that the entire space is fearful. Now, we have actually signed up with 𝗖𝗢. A lot of people are probably familiar with this by now. And we have various different cryptocurrencies on here. And VeChain is one of them, right? So we've just gone into VeChain here. We get the overall rating for VeChain as a C1 rating as a general piece, which is okay. It's not the best. It's not the worst. It's somewhere in the middle. It's not too bad. It's obviously, if we just scroll on down here past the charts, we go into the Fear and Greed Index section. And here we can actually see that it's a D, right? So we've got a grade D for VeChain. Now, that is the lower end of the spectrum. So there's quite a lot of fear for VeChain, currently, right? And I know this might not necessarily kind of be represented in the current charts. One of the things with 𝗖𝗢 is it uses artificial intelligence and machine learning. And actually, it can give you a bit of a head start as to what might be coming, right? So I'm looking at this and I'm saying, okay, we're seeing that the Fear and Greed Index generally is quite fearful. It's extreme fear right now. We can see that VeChain is also at that same kind of level, right? It is very, very fearful. It's all the way down here. It's a little bit higher than it was, at the beginning of May, for example, but it is still dropping and it is still quite a lot of fear. So it has come down in the last few days. Now, we also have the liquidity over here, and we can just zoom in on this as well. And here we can also see that the liquidity for VeChain has also dropped a little bit down to C2 rating. So not only has the Fear and Greed Index also dropped, we have the liquidity dropping down to a C2 rating as well. And again, unfortunately, when it comes to VeChain right now, with everything that's going on, we can just zoom in here, and we can also see that the Sharpe ratio, so the risk to reward, or risk to your rewards ultimately are also at the lower end of the spectrum right now. So this is kind of telling me that there's a bit of a rocky road ahead here for VeChain, specifically over the weekend. I think it's going to be just a weekend thing, and we'll get into the charts and see what's going on there. But when I'm looking at 𝗖𝗢 here, it is telling me it's not the best outlook at the moment for VeChain. So we do have to be mindful of that. Obviously, stick with us, guys. Don't just take that and jump off this video and go selling, because that's not what I'm going to get to later on. I think there's a bigger play here, and we want to be paying attention to the bigger picture, not just the right here and now. So right now, these charts are telling us that it's not looking brilliant for the weekend ahead. But we can also see here that it is an A1 rating for profitability, right? So the return on investment is also still up there as an A1 rating. And we also have that peak end value up there at a B2 rating. So the issues specifically for VeChain seem to be around the risk to reward, the liquidity, and the amount of fear that's in the space, right? And all those things kind of actually go hand in hand together, right? If you really think about it. Whereas the longer term piece here, when we look at the profitability, the return on investment is actually at the upper end. It's as high as it can go. So it's got an A1 rating, and the peak end value demand is also up there at a B2. So right now, using the EVI, we get a little bit more of a granular picture as to what is actually going on from a fear and greed index, liquidity point of view, Sharpe ratio, the ROI, all of that kind of stuff, right? So now we have a bit of a broader picture as to how it's kind of averaged out at a C1 rating. Now, we take this information and we can take a look at the stock to flow model. The stock to flow model, which we pulled up a couple of times now, shows us roughly where we are in the cycle, and we can see how the history of this particular cycle has mapped out across the years, right? So we can see over here in 2013 there was this high peak up here and quite a steep pullback, right? It's a huge pullback, and people thought it was the bear market and that it was coming to an end. And of course, that wasn't so much so. And actually, it went on to peak up the top here at the end of 2013 before actually finally cooling off again. Okay. And what you can see is that you go into 2017, and we actually had a pullback just over here at about June, July time of 2017. And that actually coincides with where we are right now. This particular correction was not as steep as 2013. It was actually quite mild in comparison, but it was a significant correction nonetheless. What correction we've had right now was about the same kind of timeline for 2017, is a little bit steeper than that of 2017, but not as severe as 2013. So we're somewhere between the two. It just shows us that history doesn't repeat itself, perfectly. It's not exactly following the exact model, but it shows us approximately what has happened in the past that is approximately happening again, and it gives us a bit of an idea of what is to come in terms of we haven't peaked out above our line here like we did in 2017 or like we did in 2013. So we're partway through the bull run, and it's important just to remember this as we get into the longer term piece. It's important that we don't just focus in on the narrative of the short term piece. Ultimately, right now there's loads of fear, there's a liquidity problem right now, and there's risk to rewards right now. But ultimately, when we take a look at this, we actually have a longer term strategy where we think actually we're going to be peaking up here. So yeah, it doesn't bother me so much on the right here and right now because we have a longer term strategy in play. And this is then confirmed again when we take a look at the Bitcoin dominance piece. Here we can see how Bitcoin's dominance dropped down to 39 and has started to increase again. And this is again something that you saw over here where we came down to about 37 and it started to rise. From this particular piece of history, it tells us that ultimately Bitcoin has come down. It also got a bit of dominance back again from the altcoins, and it also rallied all the way up to about 67 before actually the altcoins and the rest of the market went parabolic, bringing Bitcoin's dominance all the way down to 32%. So where are we in this particular cycle? We're still quite early on. We're expecting a bit of a pull up towards that kind of 60 level before we go parabolic and finishing down at the bottom here at around 30%. So ultimately, everything here is actually quite aligned. We obviously have our stock to flow model showing us that where we are in the cycle, which has been mirrored year on year. And we also know that Bitcoin's dominance is kind of reacting in the same way that it did back in 2017. So history is repeating itself. It's not exactly to the percentage point. We're 2 percentage points off in terms of Bitcoin's dominance. We're a little bit of, a bit of a variance here in terms of the depth of correction based on 2017, 2013, but the theory is that it is still following the same premise. It is still following the same pattern. It's just a different severity of correction. So now we know that ultimately there's a generalized fear and greed index that's quite fearful. It's very fearful. We know where VeChain actually currently sits in this model. We know there's actually a lot of fear out there. There's a bit of issue with liquidity, and we know there's a risk to those rewards. With that being said, the ROI and the return on your investment is the best that it can be. And we also know that the bull run is not over. We're partway through, and we can see that from the Bitcoin dominance as well. we can then go ahead and take a look at the VeChain chart here, and it kind of confirms all of this for us. This is the weekly view for VET against the USDT, and this actually shows us a little bit more detail. Let me just make that bigger for you. Here we have what I believe to be the Elliott wave, 5 waves going on. Here we have from wave 1, from 0 in the crash of March 2020, up to the top here for wave 1. That actually happened on the 3rd of August, and we can kind of all remember the highs of August 2020. It was a load of DeFi stuff going on, but everything kind of rose up together and it peaked out. I believe that was actually wave 1. Wave 2 then brought this down to this area here. For VeChain, this is actually a key area. Okay, this actually was 0.008 of a cent. Yes, 0.008 of a cent. And this is actually a key area of support over here. It was a resistance line here, resistance line here, resistance line here. It's no coincidence that the crash for wave 2 actually bounced from this line here. So that actually was quite consistent. Then we obviously then go into wave 3. Now, wave 3 obviously is the peak of what we've seen in April. Okay, so this actually was the 12th of April, and we can see that that was nice and high just up here. I think it was actually a high of 27.9 cent. Okay, and now we're into wave 4. Now, there's a couple of rules that we have to have or have to understand when it comes to Elliott wave theory, and these are very important rules. Okay, so in brief, wave 2, if it's a sharp correction, then wave 4 will be a slow and steady flattish correction. If wave 2 is a slower, flatter correction, wave 4 will be an incredibly steep correction. Okay, so ultimately, guys, what you're seeing there is exactly that. You're seeing wave. I don't know what I just did there. Let me just correct that for a second. Let me get that back up. There we go. So what you're seeing here with wave 4 is a very sharp correction after a flatter wave 2 correction. The other thing that we have to bear in mind is we cannot cross over wave 1 with wave 4. So wave 4 is impossible for it to cross over wave 1. Therefore, if it were to drop below our yellow line here of 2.3 cent, there is no 5th wave coming. So it's important that we mark that out on the chart here. So other than that, guys, we have a 50 moving average just below our low point, which looks like an interesting point to also be getting some bouncing from. We can see that from wave 2 over here as well. So we want to see if that continues to rise with the price of VET. We can also see that 200 moving average just down there as well. Now, from this weekly view, you get a pretty good picture as to what is going on the bigger macro scale, right? We know that there is a 5th wave coming that I think will put this thing somewhere between $1 and $2. And again, we won't know that for sure until we actually get into wave 5 and a little bit more clearer picture is presented. What I'm going to do is just pull this down into our daily chart, and here we're going to take a bit of a look as to what we think is actually going on the shorter term. Okay, so this is where everyone is going to potentially be more interested because it's quite, now, it's right now, right? What's going to happen next? Ultimately, we have an idea that we think that VeChain's going up to those much higher values, but first of all, before that happens, we're expecting a little bit of pain. And what we have got here is a Fibonacci retracement zone. This is actually highlighting an area of interest to us. This is the 618 through to the 786. We want to make sure that VeChain can push past this yellow box and push into the 786 area and close up there. Ideally, you want a closed candle that's at least a daily. A weekly would be preferable. Okay, now what looks like is happening at the moment is actually Bitcoin's having a correction and is pulling the rest of the market down with it. Now, with that being said, there are a few key areas that are going to hopefully be acting as a good support line for VeChain. Now, we obviously have our 2.3 cent area down here, which is the lowest that we could ever potentially go to, in my opinion, for a wave 4. I don't think we'll actually be setting another lower low. I think there's a 200 moving average here that could be working for us as a good support line if we were to drop down lower, which means that it will be actually a higher low, not a lower low, which would actually be a really good bull signal to say that this thing, it looks like it's coming to an end and we're going into wave 5. With that being said, if we do go ahead and set a lower low, there's going to be some interesting areas approximately around here, and I'm just going to mark this on the chart so you get an idea as to where things may go if we were to. That would come in at about 3.4. There's one area there, and also there's going to be an area approximately there as well, about 4.6. Okay, so these are not exactly accurate. I was quickly marking them out so you get a bit of a ballpark figure. There's a couple of areas that I'll be paying attention to on the way down. I don't think we're actually going to drop down to a new lower low for VeChain. I feel there's going to be a bit of a move to the upside, and we have some support lines of those averages as well acting for us. But we are expecting a bit of a decline as we can kind of look at this information here, when we see there's a lot of fear in the space. There seems to be liquidity problems. The risk to reward is greater. Ultimately, if it feels like the market will react negatively in the coming days. So specifically this weekend, I think Vechain is potentially going to suffer a little bit. With that being said, I'm looking quite keenly to make sure it doesn't set a new lower low. I don't think it will. And if it does, there are some areas to be watching out for. 4.6 cent, 3.4. I don't think it will go down as low as 2.3, but there's one there as well. Okay, so the other thing we have to bear in mind when it comes to those Elliott waves, wave 4 can only, or typically is only 40% of wave 3. We've actually had that, and it's actually been a little bit more extended than that. So in terms of wave 4, it feels like it has bottomed out. It's been a sharp correction that you would expect because wave 2 was flatter, and it's already gone to over the typical amount of a correction for wave 4. So with that being said, I feels like it's bottomed out. Technically speaking, there's a couple of areas of support that were just below where it is, and we are at the moment unfortunately struggling to get into the yellow box. With this being said, guys, Bitcoin seems to be the dominant one here driving the market at the moment. We haven't had that decoupling of Bitcoin and the altcoins just yet. Normally that happens a little bit later in the year and in the cycle. So right now, still incredibly bullish long term for Vechain. I think 2025, this thing's going to be absolutely amazing. And for 2021, I still feel we're going to see that between $1 and $2 level. Quite comfortably. So I think ultimately what we're looking for here is just to find good support lines as Bitcoin tries to figure out what's going on as it kind of finishes off its Wyckoff, right? So right now, Bitcoin unfortunately is dominating the space. For Vechain, I'm expecting a little bit of pain before things get a little bit better, but I don't think we're going to be dropping down any lower than the 5.1 cent that we've already seen recently. So with that being said, I think that Vechain is going to have a little bit of pain over the weekend, but I think the future prospects for 2021 on Vechain will still stand strong. And again, we're looking to get past 20.8 cent and get that weekly close candle. I don't think it's going to happen this week. It might not even happen the week after that. This potential correction and potential slow move to the upside, it could take weeks to kind of figure itself out. So we'll have to pay close attention. This is a fantastic opportunity if it's an opportunity you can take advantage of to extend your Vechain bags if you so chose. It's important that you do your own research and do not listen to any 1, 2, 3 different influencers. Ultimately, the decision to either buy or sell is your own. Only you can make that decision. Chris, myself, we're not financial advisors. We do this as a bit of a hobby. We're interested in cryptocurrency. We invest in cryptocurrency. This is documenting our journey through this space. Hopefully this information is also useful to you guys. But yeah, ultimately the decision is always going to be yours. Chris, that's everything I have for Vechain from a technical standpoint, but is there anything else you feel that you want to add?
Yeah, just again, the fundamentals of the project haven't changed, irrespective of how the market is situated currently and how it will be situated over the weekend. I kind of, feel that it's an opportunity, right? But it depends on your mindset, your aspirations. Nick, you mentioned obviously we're long-term investors. That's not going to change. These projects are doing some amazing things, and you got to take these opportunities, right? People keep saying they want the price to come down. The price comes down, no one gets in. It'll pump again, and people will say they wish they got in early.
Unfortunately, that is the way that it goes. Guys, if you found this video useful, informative, maybe even entertaining at times, do go ahead and hit that like button for us. We both really do appreciate it. And of course, if you happen to be new to the channel and you'd like to stay up to date with those new cryptocurrencies, the hidden gems, the technical analysis and news, then do become a subscriber. By subscribing, you'll be kept up to date with absolutely everything we do here. It is free. You'll stay well informed, so why not? With that said, done and out of the way, we hope you have a fantastic day, guys, and we'll catch you in the next one.
Yeah, take care.